Petroleum Profit Tax further, we will need to look at a review question, one that I have brought down here. We'll use this question to try to see some important areas that are usually tested for under Petroleum Profit Tax. So this is the question, and we are going to go through the question together and trying to point out one or two things to you as we go through the question. Now, review question. I have here, Vaseline Petroleum Company Nigerian PLC had been operating an oil exploration for export and local sales. The result for the accounting year ended 31st December 2008 for the company showed the following. I have here opening stock, right? Sale of crude oil, exports, local, less closing stock. First point of note, whenever you see a question like this with opening stock and closing stock, just start to think about or think of stock adjustment. I'll take it again. You are confronted with a question on petroleum profit tax. You are seeing opening stock and closing stock. Think stock adjustment. So you will have to compute stock adjustment somewhere here. Okay, so we'll move on. Deduct factory cost, carriage and freight. These are all the costs. Salaries, consumables, rent, staff and office, repair and maintenance, interest on loan, depreciation, stamp duty on debenture, donation to political parties, contribution to staff provident fund, royalty, custom and duties, profit before tax. That's your profit before tax. That's net profit as per account here. Let's move on. Additional information. The company total export of crude oil during the year was 2,000 barrels. Take note of this, which was not less than equivalent of 240 naira per barrel at the main international trading export center. All right. Now, the amount of 7,500 expended on items include non-productive rent of 3,500 and payment on accommodation for staff as stated as follows. I have all of this. 2 buildings for directors at 120,000 each, 240 in Lagos. 6 flats for senior managers, 600,000 in Lagos. What we are going to do with all of this, we'll see as we go on. 8 flats for oil geologists, 960,000 in Port Harcourt. So the total here is 840, 960. The directors earn basic salary of 500,000 per annum each, while the senior managers and geologists are on a basic salary of 200,000 per annum. Royalty and custom duties of 450,000 included royalty in locally disposed oil of 2,500,000. Custom duties paid on importation of capitalized asset is 1,800,000. Schedule of qualifying capital expenditure with date of expenditure. Asset, I have this column here, asset, amount and date of acquisition. Okay, we'll go on. These are the assets and the date they were acquired. During the year, plant and equipment imported worth 20 million was located offshore at between 100 meters to 200 meters depth of continental watershed area. Now, what are we required to do? Compute the tax liability in the relevant year of assessment. Right? Okay, so that is the question. How do we approach this question? What are the requirements of this question? I just told you at the beginning that you are going to do stock adjustment. Okay. You are also going to compute the capital allowance because I have. Okay, let me list down things that you would do. Okay, let me call them things to do. Okay, 1, stock adjustment. Get the stock adjustment. Why? Because you have an opening and closing stock information in the question. So whenever you have that, always show your stock adjustment. 2, you will of course compute the adjusted profit. Adjusted profit, because I can see some expenses there that normally will not be allowed for tax purpose, be it petroleum company or ordinary company. Adjusted profit, you are going to compute that. 3, you are going to compute investment tax credit. Investment tax credit. You remember investment tax credit. Why? Because of these assets that are located offshore. all right, and the depth of the asset, the area, the location of the asset counts. Whenever you have asset located offshore, you will compute your investment tax credit. Okay, so you note that down. This is another one you have to compute. You will compute your education tax. We will talk about education tax more here. Education tax, how to compute education tax, because education tax is an allowable expenses for petroleum companies. So how do we compute it when it becomes an allowable expenses? So these are what you should do, you should show as you're working. And of course, the main part of the question that asks us to compute the tax liability. So this will be my workings, things to do and workings, and of course the main question. Now if I want to start this, I will rather start this way. I will use this page for the main body of the solution by saying Vaseline, okay, I should put here solution, solution, Vaseline Petroleum Company Limited, Company PLC, right? Computation of tax liability, computation of tax liability. For which year? We are going to go back and see the year in question. The year in question is 2008. Let's see, 2008. Let's see, let me show you. Wow, this is it. The result for the accounting year ended December 2008. So we'll be preparing computing a tax liability for 2008. For 2008 tax year or year of assessment. That's the beginning of the question. So this first part will take care of the question. Okay. Whatever I'm going to do here, I should start with net profit as per account. Net profit as per account. Because I'm going to show an adjusted profit here and then move on from there. So let me keep that one there. Net profit as per account. I can quickly pick that from the question. Let me go back to the question and see my net profit as per account. You remember this is steps towards deriving your adjusted profit. You always start with net profit as per account. What's my net profit as per account? This figure here, 49,200. So it is that same figure I am going to take. There we go. 49,200. So I'm going to put here 49,200. I'm going to create two columns here, one here and one here. 49,200, 49,200. So that is the starting point. Okay, and for the second page, I want to use it to show part of my workings. I'll rather start the workings from here. Workings. And what's the first working? I told you you should show the stock adjustment. So I'm going to do my one stock adjustment. And how do we compute stock adjustment? If you go back to the format, it will tell you that it is supposed to be the sales. Okay, sales. I'll put another sign here. Less closing stock. All right. Add closing stock plus closing stock and less opening stock. Add closing stock and then less opening stock. Let's now go and confirm this. Let's go and confirm this from the note. Okay, I'll take you to where I have stock adjustment. Somewhere there with, yeah, this is it. Now we have the sales plus closing stock. I have a closing stock. I don't have any information about production cost, so it's not coming in there. I don't have any information about transportation and storage cost. If you have in a question, they will also come in. And then less opening stock. I have information about opening stock there. So that's why this is the detailed format for computing stock adjustment. But where certain informations are not included in the question, you don't need to bother. But on a good day, the least you will get from the information is your opening and closing stock. And if that happens, this is what you do. From your sales, add your closing stock and less your opening stock. Okay, so we'll go back to the question and do exactly that. Are you there? I hope you're following how to solve questions like this. Now, here we are. So, what is the sales? What is the sales? Now, from the question, the sales from the question, you get your sales from your question. So, let's go back to the question and see the sales. What is the sales? I'll take you there and show you the sales. Here it is. Sales of crude oil. Export and local. These two make up your sale. Whether export or local sale, they are all sales. So the two of them will give you 225,000. That's 2,225,000. No, don't forget they are in thousands here. Okay. So that is the sales. I'm going to take that. I go back there and put the sales. Sales is 225 million. 225, sorry, they are millions. 225 million. Okay. Now, what's my closing stock? What's my closing stock? My closing stock there is 10 million. You can confirm that. 10 million. 10 million. I'm going to add that. And what's my opening stock? My opening stock is 5 million. Opening stock is 5 million. All right. If I take off this, what will I be left with? I will now have what we call computed amount. So this is, are you there? This is the actual amount that should be liable to tax. This is what it means. Remember additional tax, when we are talking about additional tax, that you will have to compute additional tax where the opening stock and closing stock are included. So what we are saying here, that on a good day, the amount that should be liable to tax from sale of crude oil is 230 million. 230 million. Did you get that from this information? But what was the amount reported as sales? The difference is additional, is as adjustment for stock, which will have to be liable to additional tax. Additional tax. Are you there? So what was the amount reported for in the question? What was the 220 was the amount reported. How do we know that? Let's go back to the question and see that 220 was the amount reported. 220, where is it? Here. This is it. This is the amount reported as per the account. So it therefore means this petroleum company is hiding some facts. So 220 was reported, and we have recomputed and found out that it's 230 that should have been reported. Okay, so there's a shortfall of 10 million. Okay, that's adjustment for stock. So reported, this is your computed amount. Computed amount. And when you compare that to the reported amount of how much? Of 220, 1, 2, 3. Okay, I'm going to have a 10 million adjustment for stock. Adjustment for stock of 10 million. Okay, 10 million. So I have 10 million here. So that settles your stock adjustment. What we are going to do with this 10 million, you'll see later. So let's move on to the next computation. The next computation is for us to compute our adjusted profit. So we move on from there. Step 2 or working 2. Computation of adjusted profit. Computation of adjusted profit. All right, adjusted profit. Okay, so for our adjusted profit, what do we do? Net profit as per account. Net profit as per account. Just remember the format I gave you. Net profit as per account. Naira sign here. What's the net profit as per account? 49,200, because I want them in million. Okay. Add back. I'm going to add back the allowable expenses. Add back. Of course, always remember the first one is depreciation. Depreciation is always the first culprit. Once you see depreciation in any question, know that it's to be added back. Add back depreciation. How much is depreciation? Check the account. You see depreciation is 50,000. Okay, I'll take you there. 50,000. Let's go back there and see depreciation in the account. Depreciation in the, this is it, 50,000. So it's not allowed. It's a disallowable expenses for the purpose of tax. So I've taken that. Let me now go again, or let's do something. Let me just go through the accounts and tell you which we will all agree which one is disallowable. Okay, stamp duty on this debenture is disallowable. Stamp duty on debenture is disallowable. If you look at the list of your disallowable expenses, it is there. So stamp duty on debenture is going to be added back. Donation to political party is going to be added back, is disallowable. Did you get that? Okay. All right. So we'll take those ones first. Let's go back and put them as we have agreed. Okay. We said stamp duties on debenture. Stamp duties on debenture issue. On debenture. How much is that? 1 million. So I'll put here 1 million. All right. Donation to political parties. Even though this is a company, donation is allowed, but it is only allowed to the organizations listed in the 5th schedule of CETA. Okay. Now, political parties are not listed there, so donation to political parties are never allowed. Donation to political parties. Okay. How much is that? 1.5 million. All right. There is one item that should come in here as disallowable expenses, and I'm going to show you that. Now, let's go somewhere. Let me take you there. And explain what we should do there. Now, here we are. This is information number 1. What do I do with it? The company total export of crude oil during the year was 2,000 barrels. Did you get that? Which was not less than equivalent of 240 naira per barrel at the main international trading center. This information we have here is for us to get, okay, the amount that should have been at posted price. Remember your APP. Adjusted posted price, or in this case posted price. Don't forget, for your sales, you say the number of barrels times, are we together? The number of barrels times the selling price. And we went down to explain what the selling price is. Okay, where we talked about posted price. This is our posted price. So if we were to multiply 2,000 by 240 per barrel, it will have given us 480 million. Is that correct? Oh, sorry, I need to make some adjustment here. This is not 2,000, but 2 million barrel. Okay, 2 million barrels. So sorry about that. That was a typographical error. So I'm going to correct this to read 2 million barrel. 2 million barrels. Sorry. So again, if we were to multiply 2 million barrels by 240, we are going to have 480 million naira. 480 million naira. Okay? So take note of this figure. Now, the proceeds from crude oil exports was what? Proceeds from crude oil export. Let's go back and check. Here, proceed from crude oil export, it's 200 million here. Okay, that is what is reported in the account. And now we are saying that the sale was 2 million barrels, and each of the barrels go for 240 naira. But here we are reporting 200 million, so there is a problem there. There is a what we call taxable income omitted here. Okay, taxable income that is being omitted. And remember your format, taxable income omitted should be added. So we are to work out our taxable income omitted, okay, So it therefore means it should have been the income that should have come in here for tax purposes 480 million, but in the account they reported 200 million. So there's a difference. What's the difference? The difference of 280 million, okay, should be brought in here into this computation of adjusted profit. Did you get that? 280 million. So we'll come down here and put the difference between sales. Okay, difference between sales. Which sale? Export sales. So in the account, it is reported 200 million, whereas actual amount should have been 480 million. So I'll come down here and put 480 million, okay, for proper understanding, minus 200 million. So whenever you look at your question, you remember where this 200 million from and where the 480 million from the working. So what that means is I'm going to have a difference of 280 million here added back. And so I will have my adjusted profit. I will have my adjusted profit. When I do all this, I'm going to have adjusted profit. Are you following this? So this is how to go about these questions like this. Adjusted profit. What my adjusted profit is 381,700,000. You can confirm that, put those figures on your calculator and add them up, or add them up. Net profit, just add back those figures.